So, before we start with the webinar and the panel, let me give you a brief overview and intro. I'm Veronica, also called Vicky, and I'm your host for today's webinar about smart contract audits. I'm in FinTech since 5 years now, and currently I'm supporting the Bundesblock. The Bundesblock is a nonprofit association with a focus on the blockchain industry. So at the moment, the Bundesblock has around 80 members, and it offers a platform for its members to jointly advance blockchain issues, which is great. The first priority is political work, and for example, the interests of the members are represented when it comes to new laws, regulations, and guidelines that affect the industry. This is accomplished by preparing position papers and statements on the government's draft laws, and these are developed together in our working groups. So we have new members joining, just a second. Yeah, and I'm very happy and honored that I have so highly qualified experts with me on stage today. So I would like to give you a warm welcome. Pavel Reykjavik from ULAM Labs. He's a blockchain security researcher. Then we have Liz Steininger, CEO from Least Authority. We have Jens Hermann Poulsen, director at Deloitte. We have Marina Markecic, executive director and co-founder from European Crypto Initiative. And Dirk Schuster, who is a tax technology specialist, and from Gocke Schaumburg. Great. We have decided to pick this topic because it's kind of under the radar, but nevertheless it becomes more relevant when it comes to progressive digitization and hyper-automation and the dependencies that results from it. So we need to trust the written code more and more. So beside this fact, the key drivers for audits are hacker attacks that have caused quite a stir in the past. And also investor protection that comes along with new regulations like the European Markets and Crypto Assets Regulation, the German Electronic Securities Act, or the European Data Act. So while audit service providers for Web3 and blockchain received a wave of venture capital in the US 2 years ago, the topic is now reaching more and more attention globally. And it has a relevant area of activity for large consulting firms, specialized new service providers such as ULAM Labs and Least Authority, or traditional technical providers like TÜV. And at this stage, I would like to thank ULAM Labs for sponsoring this webinar, and also Tino for your great support in the background. I'm happy about this collaboration because Bundesblock also wants to strengthen the German-Polish partnership. Together, we prepared a little surprise at the end of this webinar, so it's worth sticking with us till the end. So let's jump right into this panel because we have to discuss a lot about smart contracts and the big question if we can ensure trust through smart contract audits. I have to say that I feel very blessed that the Bundesblock asked me to moderate this event because this is also a very interesting topic to me, and I want to learn more about this issue. So I'm thankful about the great panelists who are willing to give us a deeper insight into the following issues. What is a smart contract in essence? Why is an audit so important? And what do laws and policies have to do with it? So now I want to give the panelists the opportunity to introduce themselves, and then Pavel from ULAM Labs begins with his slides. After that, I will ask the panelists some questions and we start more discussion. So please feel free to raise your hands or use the chat function if you have questions for the panelists. This should be more open and controversial discussion where everybody can contribute. We try to finish at 7 o'clock, so you have the chance to watch the rest of the soccer game, hopefully. And now let's start the intro round, and I kindly ask Liz Steininger from Least Authority to make the beginning with the introduction.
Sure. So yeah, Least Authority, we've been performing security audits in the blockchain space since about 2015 and building privacy enhancing technologies since about 2011. We focus on the security of distributed systems with a keen interest in cryptography, especially cryptographic protocols and how they're used, including zero knowledge proofs, fully homomorphic encryption, and some other acronyms that float out there. But yeah, I mean, we're happy to be here and participate. I'm happy to be here and participate in the webinar.
Thank you, Liz. And maybe Marina, you want to introduce yourself next?
Yes, thank you so much for the invitation. My name is Marina, and I'm leading the European Crypto Initiative, which is a non-profit association based in Brussels. And similarly to Bundesblock, we're also following all the rules that are happening in Brussels, looking into if there will have or would have some effect on the blockchain and crypto industry. And then, of course, responding to that. So today we're going to talk about the Data Act that was somehow mentioning smart contracts. And I think it's pretty interesting for this audience. So thank you again.
Thank you as well. Maybe Jens, you're next.
Yes, thank you. Thank you also for having us here. Jens Poulsen, I work with Deloitte, which is known for audits. So this resonates with the topic, but I have to say I'm in the consulting business side here, but there I'm leading our Deloitte Central Europe activities in the Web3 space. So from that perspective, I guess we have people here that are more technical, that are more audit, but I can definitely give an industry overview since the topic has been around, I think, for a couple of years now, and now it's really interesting to see what happens also with regulation, if they see real push also from regulators for that.
Awesome, thank you. And Dirk, maybe you now?
Yeah, okay, then I'll take it from here. My name is Dirk Schuster. I spent more than 10 years working in a Big Four company in Germany, mainly focusing on data analytics. I supported clients in electronic tax audits that are typically conducted by the German tax authorities. In 2020, my interest in crypto in general grew, and I found myself constantly searching for strong technology or tax technology use cases for crypto. That was how it all started for me. And then in 2022, I resigned working with a big company and went into a smaller firm here in Germany, Gocke Schaumburg. We are probably mainly known for our tax advisors and for our lawyers. But at FGS Digital, which is a subsidiary company, we're more focusing on tax digitization and analytics topics. Currently, we're advising clients in the Web3 space as well, mostly startups though. Our services cover business model evaluation, refining customer personas, product vision, anything that has to do with tax and legal considerations, which is then done by our lawyers and tax advisors, of course. And I'm here to learn more about the current state of smart contract audits and to share my take on what I think is really needed in the event of a tax audit happening that has to do with crypto. And of course, Vicky, I would like to encourage everyone that's listening today to join the German Blockchain Association, Bundesblock, in case you are based in Germany, working in Germany, or living in Germany.
Thank you. Yeah, we have 11 working groups, and we are always happy to have support here. And now I would hand over to Pavel, who can make his introduction, and then I would be happy if you could start with your slides about what are smart contracts in essence and where are the vulnerabilities. Different word. But yeah, the stage is yours, and thank you.
Okay, so hello, I'm Paweł Rejkowicz. I'm working as blockchain security researcher at ULAM Labs. I'm performing security audits and smart contracts developments for the last 3 years. I have, yeah, my hobby is to tackle complex things and understand them from the ground up. And yeah, blockchain and smart contracts are kind of such things. And to understand the vulnerabilities and the sources of problems and why audit is necessary, we have to first know what smart contract is and why are they smart. Yeah, so we start. Smart contract is the description how native token can be transferred from or to the address. So yeah, it's just the transfer, how things flows yeah, in the real life. The contracts also are to describe how goods are exchanged and other things. And that's it. Yeah, it's simple concept, but it's powerful because it can be composed. I have mentioned address, and what is that address? We can think of it as a label on the transfer and deposit box. Smart contract is written on the back wall of that deposit box. If written, it cannot be changed. There are also native tokens stored in that box. Address is very important because it uniquely identifies the deposit box. There's only one deposit box for given address, and there are so many addresses that it's enough for everyone. Yeah, and why it must be a lot of addresses? Because there are no people on the blockchain. There are only contracts. If contracts mimic human behavior and humans are smart, maybe this is why they are called smart. Yeah. There are no humans on the blockchain is strong assumption, which has some consequences. If there are only smart contracts, we cannot say how many users actually are on the blockchain. If there are only smart contracts, we can never be sure who exactly is responsible for some actions. Yeah, and there are some two major types of smart contracts. It's not a popular definition, but there are empty contracts and not empty contracts. Empty contract is the simplest, but also the most tricky contract. It allows anybody to transfer native tokens to deposit box described by empty contract. But there's higher order law, which says you can transfer native tokens from deposit box only if you know private key for the box address. Higher order law describes the process of private key verification. It happens that verification is very easy, but guessing private key from the address is almost impossible. There are also special empty contracts like zero address. It's proof that it's impossible to find such private key for address zero. So we can use such address to burn our tokens or our goods. Sometimes it's desired. For example, if you go to the opera, you want to burn your ticket before you step into. Yeah. And the most interesting kind of contract is not empty, which describes how native tokens are spent or received. Higher order law defines language for all the words for that contract, and such words on the Ethereum, for example, are EVM opcodes. Yes, I haven't mentioned Solidity because Solidity is just a tool for humans to to create EVM compatible contracts. And they are very special in one more way. As we have a contract, we can write how this deposit box handles deposit boxes which are inside. But they are not containing native tokens, but only numbers. Contract defines the rules how content of those boxes can change. But after all, there are no tokens, shares, NFTs. Those are just numbers. And this is very important because they can have value only if they can be turned into native tokens, or there are some people interpreting those numbers as something useful. And now extra explanation how it all works together. Let's start with contract. As I said, contract is an agreement between parties. We need such agreement to enforce private property or for trusted third party holding our private property for exchange for some other goods. If some actions violates the contract, the best solution is to revert all the side effects caused by forbidden action. In the real life, it's very problematic because, for example, if someone breaks something or even do something worse, we cannot undo it in the real world, but in the digital world, it's not so hard and it happens. And who operates those deposit boxes? Yeah, because we said there are deposit boxes. The answer is simple: the ones who wants is the match. So of course they have to prove it, and again we have to look in the consensus, because as I mentioned before, a higher order law, it's kind of consensus. How someone who wants something the most is defined. And after all, those operators are reading what people are writing around the world, and if someone who has some funds sign the transaction, they just look at that transaction and they do what they say. And such transaction contains fees, signer address, destination contract address, and some words. And those words are interpreted by contract. Without them, contract just have only one case. Contracts can have references to other contracts, and so yeah, such execution can take forever. But fee is not sufficient for operator. Yeah, all the changes are reverted, and of course it's also described in consensus. And now let's talk about the problems about those contracts. So now let's talk about functions. Yeah. The most important function is, as I said, is acting as third party. Everyone can imagine the simple situation when, without contract, someone pays for something and gets nothing in return. Contract is even more natural choice if the return follows payment much later, like providing liquidity for DEX, for some fees, or lending protocols for some interest. But if we only treat smart contracts as third party, we have nothing to exchange, only native tokens. So we also need smart token as bridge between blockchain and real world. Yeah, without this, we cannot make an exchange, and it's a little bit tricky because we have to trust that some numbers are really mapped to something real in our world, and in the best design system, if someone behaves badly, he should lose incentive or should be punished by, I don't know, national law or other things like that. Of course, we have some problems with such contract, and the problem, which is most of the time not seen by product owners, is the problem of trust, because I conduct audit from the user perspective and owner perspective. And from user perspective, if contract safety depends on a single address, they have to trust the owner of that address, and also they have to trust that private key for that address is not lost or stolen. The other more popular problem is a problem of logic of the contract. The main problem is contract complexity. If not all possible cases are predicted and checked, unexpected can happen. Even if almost everyone in the world will think that something is illegal, if transaction is valid, it cannot be reverted, except one case, the DAO, some time ago. It's important to say that the contract is using many addresses to describe the logic. First and second problem can occur at the same time and many times. The last problem is the problem of the interface. User can be surprised that something else was executed in between the signature and actually execution. It's like buying something for any price using credit card with a good limit, with a big limit. And based on that, how audit process look in the essence. I could talk about re-entrance attacks, overflows, and other problems with authorization, price manipulation, deadlocks, and things like that. But most of the time, I want to focus on three primary steps. First is knowing expectation. Knowing expectation is the process of knowing the product by reading docs, marketing material, I don't know, maybe checking other similar systems and checking comments in the code, and what I would expect if I were a user. Then I try to understand actual behavior. So checking the code, running it. If I have no idea what can go wrong, I run some random tests like fuzzing, and then I have full understanding. And in the end, if I see that a contract is not doing enough what is described in expectation, or in the other case, if contract is doing too much, I'm reporting it. So if, for example, if contract is doing, it's not doing too much, for example, not enough checking, but user can take advantage of that. But from the other hand, if contract is not doing enough, good user cannot get everything what expected. Yeah? From the other side, if contract is doing too much, it's not popular case, but some bad user can force the contract to break. Yeah, and for example, if you check something extra during withdrawal, and that check always fails, you can never withdraw anything. Yeah, so audit process is the process of finding such differences, and yeah, if you describe the process in such way, you will always find something. It depends on it doesn't matter what blockchain or which solution you are auditing. Okay, thank you.
Well, thank you very much for this technical insights and also knowing more about the problems that can occur during a smart contract audit. It's also important to know that maybe a smart contract audit is kind of a one-time audit, but if you do afterwards changes in the code, then it's not included in the audit before, right?
Yeah, it's problematic, but it depends how much changes are done.
Yeah. So maybe we go over to the next question, and maybe Jens, you can answer this question. Why is an audit important? Can you give us a few examples here?
I mean, Pavel did explain that in great depth, but I think if we go back to the meta view on it, becomes clear that the biggest difference that we have from a normal IT audit, because you would usually always test your software whether it does what it should do, and that often fails. We all know that. That happens in banking, in payment stuff. We often don't talk about it because companies are insured or they find it in testing, but it happens all over the place. But the big changes here, as Pavel said, almost in German, wenn das Kind in den Brunnen gefallen ist. So it's really hard to rescue it when you have screwed it up. Yeah. Either you need, and we have seen examples of that with the first DAO, you need the full community to roll it back, which is super unlikely. Or we need authorities that are able to change something in the network that, well, as maximalist, you don't want that either. So this is really why it's so important to make sure in the very first place that we did check all that through. The reasons for the audit are then, well, they're twofold. One is the company itself doesn't want to lose the money. That is behind it. The second one is, and that's mostly the reason for an audit, is you want somebody else to give you trust that what it's written or what it's coded or what it's on a bank account is really there. This is what an audit is in the end. You add another trust giver. So as we say, code is law. In that case, we don't trust the code. No, the problem is not the code. We don't trust the human that has inputted the code, that it
exactly
he or she did that right. And that is what the audit really brings in there. You are another trust giver that is needed in the process of really enabling business models.
Yeah, and also because not everybody is able to read a code. I mean, this is very complex, and it's something what maybe only developers can check if this smart contract is now safe or not. So
And it
gives
even
a
gets
kind
more
of
important, yeah, and it even gets more important if you have use cases where we use smart contracts in order to enable trust. I mean, Dirk has been looking into various use cases in the tax space where we want to use smart contracts in order to put more trust into processes like transfer pricing and so on and so forth. So then we added another layer that needs in order to really work with it. So that is why it's so important. I mean, there are tools out there. We can check that formally. I really like the development of decentralized auditing platforms because we also have added risks. If we have the big difference between if you have code somewhere that is audited in a tool, it's usually we have APIs to interconnect with it. But it's really hard for externals to find the same vulnerability somewhere else. Why, in a smart contract, as long as you have enough capacity, calculating capacity, it would be quite easy to identify other smart contracts that do have the same flaw. And then the damage is much bigger than what we would see with a single attack.
Yeah, right. So maybe the next question is perfect for Dirk, because you've said you took a look into a lot of smart contract use cases. So can you maybe name some industry areas where smart contracts are practically used or useful?
Oh, I mean, there are quite a few use cases that we can think of. Let's see. What comes to mind? What easily comes to my mind is something that I think Jens has been working on: tokenization of certain things that could, for instance, how do you say it in English, Jens? Ladesäulen, charging stations for electric vehicles, for instance. You could tokenize them, so that's where you could make good use of smart contracts. But I mean, probably everyone on the call is familiar with lots of use cases for smart contracts. From the top of my head, NFTs as vouchers or coupon codes, for instance, is a thing that is going on already. We've seen that with MetaBrew here in Germany. You can even think of VAT or let's say VAT clearing systems, where you can actually have all the invoices done using blockchain communication and then store the relevant information that needs to be seen by the tax authorities, for instance, on chain, but not every detail that you don't want to share on a public chain, for instance. Tokenized assets of any kind, really.
Yes, so I think this becomes more and more relevant in the financial industry. And yeah, thank you for your opinion.
That's absolutely true, I think, because it's not just financial industry, but as a consequence of it being relevant for the financial industry and also being applicable to nearly any physical asset that you could tokenize, it directly impacts taxation of all companies that are using those smart contracts or that are developing smart contracts, if they are acting as a company and not just as some random developer that wants to fill out this niche and provide some code that does something for you.
That's correct, yeah. So now I would hand over to Liz, who has prepared also some slides. And I'm really keen to know more about how does a smart contract audit work or look like. I mean, Pavel has also gave us some insights already, but Liz, the stage is yours, and I'm keen to see more.
Great. Yeah, so this is the workflow that we follow for an audit and engagement. I won't spend too much time on the step number 1 because that's more about the sales process. In terms of step number 2, I think this is an important one to call out about scoping the help that's needed. So really, what is the purpose of the audit that you're getting? We talked already about some reasons for why people might be interested in getting security audits. Like you all talked about, it could be anything from wanting to avoid a major loss of funds to, compliance needs, etc. So the step number 2 is really is important to also help you not only know why you're doing this, but to also identify what the best provider of a security audit is for you. And so this can help drive you to different types of auditing firms that are out there. Since there's a few of us on the call, it helps to like distinguish that, you know, some of us might be better for certain goals than others. In terms of the engagement, like I said, I'll skip over step 3. But usually it kind of, then once you have determined that and you've gotten everything set up with the engagement, then you start it off and kick it off and establish communications, et cetera, kind of figure out the terms of which you're going to engage for the audit. And step 5 is really where the bulk of the work happens. And this is where the initial review, as we call it, but this is where the majority of the review time is spent by the auditing team. And in our case, this usually focuses on a lot of manual code review, so reading line by line through the code. For other teams, this might also include quite a bit of using automated tools to look for particular errors or vulnerabilities. Also, checklists are often involved too in this, but this is where there might be some back and forth between the development team, especially, and the auditing team discussing, what is the kind of goal of certain areas of the code? What are you hoping to achieve? Because one of the biggest challenges, especially for smart contract audits, is looking at what is the logic in the smart contracts and how they are written. What are you trying to achieve with that code, and trying to figure out how to follow that logic accordingly, because there's quite a bit of flexibility in how that can happen in Solidity or other smart contracting languages. That's one of the great things about smart contracts, one of the challenges too. And so during that audit phase, there's often, some discussion. And then, then you can go through the determining the response. Step 6 is where really the development team now takes their turn, because the initial audit report was delivered after step 5. And step 6, then the auditing team has to decide which of those things they want to fix. Sometimes it can be as simple as changing a line of code. Other times it might be very significant design things that need to be addressed. So maybe a complete rewrite of the smart contract is in order. And so, sometimes there's business decisions perhaps as to why that might not be possible in the short term, or, things like that. So, but yeah, how much time it takes a development team to address something also isn't always directly related to how critical the issue is. So there's quite a variety here, and it's a really important stage for the two teams to figure out what gets addressed. And then the auditing team returns to do the verification review, and this is just basically confirming that things have been fixed, et cetera. And then, the final audit report is delivered. Here, I've also got just an audit preparation checklist that might be interesting for people preparing for a smart contracts audit. These are just some things, the minimal and the optimal, that can be done to prepare for a security audit. Again, I think with smart contracts, it helps to document the logic and the intended kind of flow and purpose of how the smart contract is supposed to act. And so this is an important piece, but not all development teams do all of these things, is what we've seen. So that's why we have minimal and optimal, and we usually make do with what we've got. And then the last thing I will just show a slide on is what the published audit reports can look like. These can vary anywhere from being, I'd say like 2 to 3 pages long, to even being up to like many pages. For smart contracts, it doesn't get too bad, but I'd say, 20, 30 pages too. It again depends on what the functionality of the smart contract is and the issues found and how much discussion there needs to be around those issues. But it covers some, this is commonly the sections, this is what we do, but this is pretty common across different audit reports. So yeah, basically the project scope, the background, so giving you the project information, the coverage, the scope of it, especially the areas of concern. So that's really related to the goals and how those map to potential security issues that are being sought and being looked for. And then the findings is really the really kind of bulk of the report here, the major part of the report, where there's going to be the specific issues, suggestions that can even be tied to, improvement of quality of the code, et cetera, things that maybe aren't directly related to a vulnerability, but could help avoid them in the future, and general observations, recommendations. So a lot there. and then some general information. So that's all I've got for slides about how the audit work looks like, but I'm also happy to answer any questions too.
Wow, thank you. I think such an audit is very lavish and can take a couple of weeks, at least, I think. I think it depends on the protocol which you audit. Yeah.
Yeah, that's a good point. To quickly mention that smart contracts audits can take anywhere, I'd say on the small side, from maybe a couple days to many weeks. And again, it just depends on the functionality of the smart contracts and also the concerns for the purpose of the audit too. So is this just a quick check for any major vulnerabilities on a really small contract that's doing something very specific? Or is it, you know, maybe even multiple smart contracts that are doing something that's an extra layer of complexity, like was mentioned before? Sometimes there's layers of complexity that's occurring and that's interacting with other sensitive systems. And so then, yeah, you might have a really long audit with a large team. So it can vary quite a bit.
Interesting. Maybe then the next question goes directly to you. We have heard before that there was such a hack from the DAO, for example. I mean, it turned out well at the end, but that was a big shock, and that makes clear, that what are the consequences of failing a smart contract audit. Maybe you have some more to talk about here.
Sure. I think the range of consequences is quite large. Just like the purposes for getting the smart contract audit, the opposite is true. You know, things can not hold up to that. So yeah, the most obvious one is the loss of funds. That's where we see the big news stories. That's what people talk about. I mean, there's leaderboards, multiple leaderboards that can show you like the largest losses on smart contracts over the years. It's gotten really long, and you know, if they were audited and things like that. Yeah, I think so. The consequences of failing to perform can be pretty significant, from funding to like we talked, maybe you aren't being compliant, so maybe there's legal or regulatory issues. Yeah, in personal data or data gets leaked, all kinds of things. Bad PR, even that.
Yeah, interesting. Yeah. So maybe this is a good handover to the next part of this webinar. And this relates to the regulatory part. And therefore, I would like to ask Marina some questions. For example, in front of the European Data Act. What is the European Data Act framework for the use of smart contracts in data sharing and transactions? And the second question, and is an audit probably not useful in regards to the EU Data Act? What do you think?
Yes, thank you for the question. So why are we talking about the Data Act, which is basically regulating data, now when we're talking about auditing of smart contracts? And in a way, it's interesting because this is the first document where we have seen smart contracts being mentioned and also being defined. So the Data Act is basically defining smart contract. I can read it here so you all know exactly how it is, and then you can decide if you agree or not. But it's basically means a computer program used for the automated execution of an agreement or a part thereof, using a sequence of electronic data recordings and ensuring their integrity and the accuracy of the chronological order. So why smart contracts in the Data Act? The Data Act is one of the main, I would say, rules that have been finalized in the previous mandate. As everyone knows here, now we're looking into the new parliament, into the new commission. But the last 5 years, there's been a big package of digital rules that have been coming from the Digital Services Act, Digital Marketing Act, and AI Act, and basically the Data Act is one of those. And the idea of the Data Act is really to bring together rules that would assure interoperability for a better market when it comes to data sharing. So it can be data sharing when it comes to users, can be data sharing when it comes to companies, but in in and especially when this data is connected to connected devices or IoT devices. And so the idea is there's so much data coming from the IoT sector, and how can we ensure that this data can be easily transferred, used in a kind of, I would say, business marketing way, but also that it is empowering the users in the way it is used. So there are fair rules on how this data is transacted. And so the idea is, okay, so there's also data that is coming from smart contracts or through smart contracts if it is connected to IoT devices. And what happens at that time? Do we have rules of interoperability between smart contracts? Do we have rules of how IoT is connected to smart contracts? And in this case, the European Union was thinking, okay, we should have rules on that. And the first thing is to define what is a smart contract. The second thing that I think is pretty interesting is that the European Union was looking into smart contracts as a way to execute data sharing agreement. So the most important part is the data sharing agreement, and then thinking about that and the way how we do even regulate agreements in general or data sharing agreements in general. They have seen the smart contracts as having a potential to basically automatize part of it or digitalize a part of this agreement. And this is why the rules when it comes to smart contracts are really coming from this agreement part. So who are the rules, who is the rules in a way relating to? The rules are for the ones that are vendors, so anyone that is selling smart contracts for someone else. So when somebody is developing smart contracts internally, the rules do not apply. This is how in a way the Data Act says. But the vendors that are selling smart contracts for someone else, or in case there is not a vendor, the person that is basically developing the smart contract, because we do know that I think this is maybe the case why they wrote it in this way. We do know that a lot of smart contracts are open source, are available globally, so it can be basically used without paying anything, or at least copied and then used. So this is who is it relating to? But what does it say? It is in a way important that these smart contracts, at least at the beginning, they are of course robust. So this is, I think everyone agrees with this, but also that there's an access control. So this is where maybe there are differences in opinions. We do need to have access control to the smart contracts. And then there's a whole question, who has this access control? Is this somebody that might be also connected to, I don't know, some kind of authority or not? In the last version, or at least from what I can see, this is not included. This was a part of one of the drafts that we have seen in the past. The other part that is pretty important is that it should assure a safe termination and interruption. So this is also something that not every smart contract has in the, I would say, blockchain ecosystem, because there are some that in a way, in theory, can run forever as long as the blockchain does run. So here again, I think the regulator was thinking, okay, if we have the right that the agreement should stop somehow and everyone should agree on when the agreement is terminated, we should have that also when it comes to technology. And there are a few other things like there should be data archiving and continuity assured and etc., and especially access control. But I think that just to finalize, the final thought is that this is the first time again that we have definition of a smart contract, that we have some design requirements for when this smart contract is compliant when it comes to data sharing agreements, again, for the vendors or for somebody that deploys smart contracts for someone else. I would just stress that this is very much focused on the data sharing. So it doesn't say anything about security. It doesn't say anything about the tech. Anything that we have discussed until now, we were talking about auditing, and mostly it was about tech. So what is the security of the smart contract? Here, the regulator is talking about assessment. So the assessment if this smart contract is compliant with this specific regulation. And again, I will stop here. If someone has any questions, I'm happy to answer.
Thank you. Yeah, Jens, you raised your hand. Please go ahead.
I've more than one, but I try to limit myself, Marina. So one is an observation that I put into a question, but do we now need audits if our smart contracts are compliant to that regulation? So another level of audit, regulatory compliance audits before the technical audit. Is that the essence in the end of what you just told us?
Exactly, I would say so. So it's again only in cases, to my understanding, again, I think we will need more clarity and more standards coming from that, because we don't have it yet. By the way, this part is going to be applicable on 11th of January 2020. No, it's already applicable. I think it was 2025. It was finalized, but not yet applicable to my understanding. I can follow up with this information, but it is definitely finalized and you can find it online. The part that we are discussing here is, again, only in cases when there's connection to IoT devices, or maybe in some cases when, of course, somebody else is deploying and writing smart contracts for someone else, again, not in-house. But yes, there will need to be another auditing that is more on the legal side. And I think this is just the beginning, because we are here talking about data. I think in the future, we have seen already some suggestions in some documents basically relating to DeFi regulation in the future. There are certain ideas on how to regulate the auditing. So who is auditing the auditors? So there will be certain rules of, okay, what is the good auditing? What does it mean secure? How many nodes does this layer one need to have? All these things that are a little bit more tech related to DeFi in general, not only smart contracts.
Yeah, and there are very specific things that are already triggered where I'd say that sounds problematic, because it's highly likely that there's a third party deploying a smart contract for someone and you don't want to have the access control afterwards.
If I may, I don't want to take too much time, but there are a few problems for sure. One of the things is that a lot of smart contracts are open source, can be copied from anyone. And this is also why this industry is so successful, because we have been sharing the code with each other and we don't need to compile it from the beginning. So how can someone then share or copy a code that was written in Japan if it's not compliant with the Data Act that should be used in Europe? The second one is, why should the smart contract be stopped if we can somehow just design a new one and connect it to the application? So there's like this discussion of front end, back end question. And then there's another question, which is, here we're thinking about data and basically regulating agreements that we think from the legal perspective what agreements are for sharing data, but we did not think about security. And everything that is basically requiring through this article is questioning the security part of the smart contracts.
Yeah.
Pavel?
Yeah, I wonder if such regulation does not cause that all the companies creating smart contracts are going to be founded in the countries which doesn't care about such regulations. For the normal financial institutions, transferring capital is quite hard. Yeah, it's not so easy. Yeah, but for crypto, you can, for example, fund your company in Singapore and then transfer back the assets back to the Europe, and you have no way to track it. Yeah, if you use good tools. I just don't believe that such regulations will be efficient. Yeah, this is just my opinion.
I would agree, but in a way they are regulating the market. So the access to the market is regulated, and the access to consumers, companies that are in that market is in a way limited.
And also, I would assume, Pavel, that even if that heals the problem for the development company, in the end, the institution then using the smart contract is also obliged to hold to hold against those rules. So that might help the developer, but not in the end the buyer of the smart contract code.
Yeah, good arguments. So I see in these discussions we could discuss a lot more. It's very complex, and yeah, it's not so clear until now how to handle everything. And yeah, but time is running, and I have a last question, and we have also questions from the audience. Maybe if we share the contact afterwards. So you can also contact Amelie. I mean, you can also contact Liz afterwards. I would like to share the contact details. And so the last questions I have is maybe goes to Dirk, who's a tax specialist. And yeah, so we have also a little outlook on this point now. About the current state of smart contract audits for crypto taxation. Can you tell us a little bit more about this field?
Yeah, sure. Well, I think that at the moment, from a tax perspective, there are not a lot of smart contract audits going on. I think there are no initiatives really on it. During the last weeks, I did a lot of networking, especially on the intersection of crypto and taxation. That includes talking to officials from the German tax authorities, and whenever possible, also to people from other countries to see what's going on in their jurisdictions. And I also had the opportunity to speak to the Regional Finance Directorate, that's Oberfinanzdirektion in Germany, of one federal state. And I had the opportunity to give my perspective on what I believe is necessary if we want to have efficient electronic tax audits. Whenever a company in Germany, whatever company in Germany, is using smart contracts or is buying any tokens and sending them across to other parties. And I mean, I think we've heard it already today that there are different reasons why you would conduct a smart contract audit. And I think it makes a lot of sense, at least to me it does, that we start becoming more precise when talking about smart contract audits. Some of them are security audits, some of them might be some kind of financial audit, some of them might be tax-specific audits. So I think it's really helpful to like opening up the whole picture and understanding what exactly we're talking about. In terms of taxes, yeah, obviously we're not talking of technical vulnerabilities, so it's a completely different dialogue that you would engage in. I think what's important is to always picture the customer, and customer could also be a tax officer from the tax authorities in whatever country. So if a resident or if a taxpayer in this country is engaging with smart contracts in whatever shape or form, buying tokens, swapping them on a decentralized exchange, for instance, that would trigger a tax event in most of the countries. And that obviously would require some kind of skill and also of specific softwares for the tax officers that they would need to have to understand what's going on there, because no one understands all of the smart contracts that are out there, because every day something new is being built. Sometimes to me it seems like everyone's trying to become the next Google and try to fill in a niche in a niche in a niche, and then yeah, just continuously developing the most super sophisticated and specialized smart contract. While I think what we really need in terms of adoption as well is we need smart contract audits that help officials, for instance, regulators or even tax officers, to perform their audits, the financial audits and tax audits, because that really helps the users of the smart contract to become compliant or to stay compliant, to decrease their risk, and to not have to face any penalties because they have not, for instance, paid enough of their taxes. What I've seen, at least, yeah, from a German perspective, talking to clients and trying to solve their issues that they had during electronic tax audits, really that there is a lack of tools available. I think it just I think it was 3 years ago, when the smart contracts have first been visualized in a suitable form, I'd say. That I think it was a library on GitHub that's called Sol2UML, directly taking the Solidity smart contract code and visualizing it in a nice way. However, from a person's perspective who's oftentimes engaging with clients in tax audits, these visualizations, even 3 years after it has been originally implemented in Etherscan, for instance, even 3 years later, they are merely tools for developers and not for tax professionals or finance professionals. So it's still hard to understand smart contracts, to understand the nature of what they are doing and what they are intended to do, especially when you're not conducting security audits on a daily basis, and you don't know what might go wrong if you choose to run a different function from an older smart contract standard, for instance. I think the practical issue at hand is that there's no single Web3 company or institution that can single-handedly establish standards that we need. And I think that also no tax authority in whatever country you would be looking at has the skills or the power, the knowledge to diligently lay out these new standards and to describe them in a very detailed manner, and then also enforce them. Because, obviously, decentralization is a big topic. Think of it. Well, let me give you a practical example. Let's say we are looking at an NFT smart contract, and the NFT smart contract has all the features that you would expect. You can mint the NFT, you can transfer the NFT, you can put it on OpenSea, and you can sell it. There are royalties involved for the original artist. And all of these things can be found in general law, right? And that's also part of the reason why people say that code is law. Because all these things have been thought out in the past and thought through. So it makes a lot of sense to first basically digitalize the regular transactions that you would see in the real world. So I said you have royalties, but what you don't see when you're looking at the smart contract, you don't see who you are interacting with. You don't know where they are from. You don't necessarily, I mean, it's not a standard yet. You don't necessarily have to have the license agreements. There are no terms of use when you're selling a utility token. And I think that, honestly, all of that should be laid out in a specific file that attaches to the smart contract that's when it's uploaded. Just like you have the contract API describing the functioning of the smart contract overall, and just like you have meta information that go with an NFT, you should have a specific file that goes or that can be helpful for tax purposes, for instance, because that could drive adoption, in my opinion. And that's the critical position on smart contracts for crypto taxation that I wanted to bring in, and that I wanted to have your opinions on.
Yeah, thank you very much. We have, unfortunately, we have to come to an end, but I'm really thankful for all the insights, and there's a lot more to discuss, and we have to consider so much. I think a lot of people don't have this in mind until now. So this was a good beginning to start with the discussion. And if you want to know more, or maybe could be interesting in this context, I posted something in the chat. Thank you, Dirk. Thank you, Jens. Bye-bye. And I post also the surprise that we have. For example, ULAM Labs offers a free consultation with Pavel about smart contract audits. I will post the link for booking this consultation now. Just a moment. And also, they have prepared an ebook, which is free. You can download this on their homepage. I post this as well in this chat. You just have to go there under resources, and then you find the cheat sheet called Web3 security. And also thank you to Least Authority. They are also offering a checklist as well. And I post this here as well. Just a second. Yeah, now we have everything what you need to be prepared for your audit. And if you have questions afterwards, you can also DM us on LinkedIn or write us an email. We are there and happy to answer all your questions. And sorry that we don't have more time now, but now you're free to watch the rest of the soccer game. And yeah, cross fingers for Germany. I don't know if they have a goal already or not. But yeah, let's take it from here. And thank you so much. Have a great evening, you all.
Thank you so much for organizing it and moderating.
Thank you.
Welcome.
Thank you, and
Yeah,
good luck
bye-bye.
with the game.
Yeah, thank you.